Hello everyone, welcome to the Ichimoku daily analysis for the SP 500 for Tuesday, January the 5th. Well, a very small green-bodied candle today, and that's quite a change of character from the previous day's candle. The previous day's candle was a very large green-bodied candle. The large green body suggested that the bulls, or the buyers, made some very solid net and bullish progress on the day between the open and the close. Today, the very small green body suggests that the buyers have made net bullish progress, but the amount of net bullish progress that they made today compared to yesterday has severely reduced. This type of candle is very similar to a reversal pattern, and that's the hanging man pattern. And the typical hanging man pattern has a very small body on the top of a relatively large shadow, so this doesn't exactly fit the ideal type of hanging man pattern. The size of the body is just slightly too large, and the shadow on the bottom is probably a little bit too small, but the reason why that is a type of reversal pattern is basically because of the small body and the small amount of net bullish gain that the bulls have made on the day. So considering that comparing today's size of the body to the previous day's body size, it really does say that the bulls have lost a lot of the power that they had on the previous day. It's pretty much what we'd expect when the market was trading up to and around this resistance area at around 1133. There was some suggestion that the market may have trouble closing up above there, but the market has actually closed up above there. The interesting thing is that the bulls have closed in control of this market, and they have shown some commitment by closing up at the high. So the market is open at the midpoint level. The bears were in the ascendancy as the market tried to sell off, and the bears lost their commitment throughout the day, and the bulls actually took control and showed commitment to taking this market higher. The market has also maintained a higher high and a higher low, so the uptrend is still intact. Just looking at the range in bar chart terms, that's the distance between the high and the low of today's candle to the previous candle. That's telling us that the bulls certainly aren't as eager as they were previously too, so that raises some doubt about the potential for this market to continue on its way to the upside. I think the only way that we can really play this is by watching the high of the current candle. If the market does take out that high, then we'd have to assume that the trend will continue to the upside, but also watch the low of the current candle for a potential reversal. Now, if the market does reverse, then there's very strong potential support at the Tenkan-sen, which is the green line, and that's at 1125. And then at the top of this zone of resistance that we identified previously as the rectangle pattern, and that's at 1120. So there's potential for strong support at that level, and we know that previous resistance tends to turn into support. And we also have potential support at the Kijun-sen, which is at 1110, and then also at a previous resistance area around 1106, and then at the top of the cloud, or the Kumo, 1080 roughly, which coincides with the bottom of the large rectangle pattern that we identified. So the bullishness that we saw in the market yesterday is not quite there. Having said that, though, the bulls did still close the market in control, and that's a positive for this market, and the market has closed above the level of resistance at 1133, but remember that resistance works in zones, so that resistance is still having its effect on this market. So really the only thing that we can do is watch the high of the current candle and the low of the current candle.